Hello traders, and welcome back to my channel. This Rich Talk FX. If you are new here, just subscribe, turn on the notification bell, and tune in on every video. And also don't forget to like this video and share this video. So today I'm just bringing you a simple strategy. It's market structure plus trendline strategy. So this very simple, guys. This very simple, and it doesn't happen oftenly on the market, but when it does, just take advantage of it. So you can see I marked these examples. Actually took these trades. That's why they are marked. I also mark every trade which I take. So it doesn't happen every time, but when it does, just take advantage of it, guys. So we are saying we have a trend line. If you don't know what a trend line is, a trend line, what can I call it? I can say it's a line of support and resistance, is it? But it's not horizontal, it's diagonal. Yeah, diagonal. So it's just a line of support and resistance. So here we are combining it with market structure. We all know when market structure is broken, they should be a retest, and when a trend line is broken, they should be a retest. So this is just a simple break and retest strategy. So this one leads into a double a double top or double bottom, and mind you, I'm using it on 5 minutes time frame. You can also use it on higher time frames, but I prefer 5 minutes time frames because you can use it like this. You go to a higher time frame, you see the market has reached your point of interest, you come back here, you see, all right, the market has been trending up, making a channel like this one from here, from this point here, going up to that point. So it has been making some sort of channel. So what can you do? You can choose to say let me put my trend line there, let me mark my break of market structure on the smaller time frame here, break of market structure on the smaller time frame, price closed below there. So what are you waiting for now? You're waiting for price to go back to area supply, to what supplied that this what this sale that broke through this higher low. Are you with me, guys? So what you do is you mark this point. You can either put your sell stop or enter aggressively, because the market is going to come back there and then push down. So where should be your take profit? This should be just a simple strategy. Your take profit comes at the beginning of this trend line, at the beginning of this trend line. So your take profit will be somewhere here, guys, at the beginning of this trend line. So you can always use this channel, this this strategy on a higher time frame. It depends on what you want. You can use it on a higher time frame or in a lower time frame, but I prefer the 5 minutes time frame. So let me show you other examples, guys. Let me show you other examples. So I was saying, this is another example. You say, all right, the market has been making this channel trending above this trend line. Then it made a breakthrough. It broke through. Then it came back. It came back to this high. It came back to area supply that supplied this sale that broke through. So the only reason why we don't have order blocks is because this is a 5 minutes time frame. You don't use order blocks on 5 minutes time frame. Boom and crash. There won't be order blocks, but maybe on other volatilities there will be order blocks, but on boom and crash there won't be order blocks. In fact, there will be order blocks, but not all of them works. You see, so it's better not to use them. So this one was too sweet. Why? Because we had creation of liquidity. We have creation of liquidity there. I think these are equal laws. Yeah, so the market created liquidity there, went up. It's going for the area supply. Once it reaches the area supply, it sort of broke through it first. It closed above it, but then it came down. What does it do again? It creates some sort of liquidity there. to create some sort of liquidity. So whenever you see equal lows, equal highs, price is coming back to that position to just take them out, because there is money resting there. So it's coming back to take them out. So once it went back to the area supply, it was rejected. You see, that's a rejection candle. Then the market starts going down. So you could have taken your trade there, and where is your take profit? At the beginning of this trend line again, at the beginning of this trend line. So you could have made money there. Let me check another example. This is another example. This one wasn't too